Well, good morning, everyone, and welcome to the M&A Forum, Deal Makers at Work, our initial online monthly meeting. We want to, on behalf of the board and the officers, we want to thank you for your patience as we also work through a very, very challenging and difficult time. So, my name is Austin Tennant. I'm the secretary of the organization, and I'll be moderating our day's activities. So, just as a little bit of preview of what we're going to be sharing today, is we're going to have a couple of welcome words from our president, Bob Benson. Then we have the very fortunate to have our presentation by um, two partners from Desroches Partners. And the title, as you're well aware, Financially Navigating Your Business Through Corona Infested Waters. I love that title. Tools, Tactics, and the Stimulus Bill. Jon Czerwinski will be joining us. He'll lead the presentation. And and Lief Nixon, the tax expert. Now, when Lief comes on, please forgive him. He may look a little bit droopy because spent the last 3 or 4 days reading through the 900 plus pages of the CARES Act. So please forgive him if he's not at 100%. But looking forward to it. As a bonus for being attached to the meeting here today, the folks from Desroches have given us a sort of a little bit of a guidebook that we'll share with all attendees, after the meeting. So it just kind of gives you I guess the Reader's Digest version of what the what's entailed with the act. So, and just a couple of other things for purposes of the meeting, we're going to let our two presenters work through their respective presentations. All participants will be on mute throughout, and then we're saving plenty of time at the end for questions and answers. And then my colleague Kyle Griffin, he will help manage it. And we ask that you push all your comments and questions through the chat box, and we'll manage it that way. We're expecting a very large crowd today, so it's probably going to be most efficient if we work through the chat box. Then we'll do a little bit of like I said, Q&A at the end, and then our fearless leader Mike Dalkey will share some closing comments. And our goal is to have you out of here right at 12 o'clock. So, Bob, if you'd be so kind as to, and I'm sorry, and we are recording this. So, Bob, if you'd be so kind as to a brief welcome before our visitors jump on.
Yeah, thanks, Austin. Welcome, everybody, to the brave new world of electronic interchange. When we were forced to cancel our meeting last month, the board and officers got together and said, how can we put together something that will bring value to our members this month and ongoing in our current situation. And so this is kind of a brave new world for us too. We're stepping into the world of technology, and the way forecasts are going, this may be the wave of at least the near future. So we would welcome any comment or criticism you have regarding what we're doing here. Any suggestions you might have, just send them to the president or the secretary, and we'll take them into consideration. I want to say thanks to George and Kyle and Austin and Mike for all their hard work to get this thing done. And thank you to Jon and Lief for agreeing to share their words of wisdom with us. So I'm looking forward to seeing and hearing the presentation, and let's get it going.
Thanks, Bob. And then just one thing I want to add on the back of that is that as an organization, we're planning to do probably maybe 2 to 3 of these a month. So as Bob mentioned, be prepared for that. But then also we'd love to solicit your input for topics and titles and that sort of thing. We've, as an organization, put together a handful of titles, but would love to hear what's on your mind and what you'd like to hear more about. Okay, so now as we move into the presentation section, we're honored today to have two partners from the firm of Desroches Partners. Starting the conversation will be Jon Czerwinski, who's the managing partner, has an audit pedigree. John will start, give us a quick overview of what, there's some basic financial tools, techniques we should be thinking about, have in our arsenal as we deal with the crisis. And then, as I said earlier, Lief will sort of close that part of the presentation, giving us an overview of the CARES and related legislation. Now, Lief, just want to remind you, we've only got about an hour here, so we don't expect you to go through all 900 pages. So, without further ado, John, if you'd be so kind as to unmute yourself, we'll flip the platform over to you.
Well, thank you, Austin, for those kind words. As he mentioned earlier, if anybody has any questions as we go through this, feel free to use the chat module. And then when we get presentations, we'll try to do them, but read them as we're going, just so I have some context as we're going. So I appreciate that. Bob, thank you for facilitating this with Austin and all the sponsors as well. Anytime you get the opportunity to help out the public, I think it's a great thing. It's the best thing we do in public services. I came to this forum by way of Jon Czerwinski, who I've worked with on numerous clients, large, small business clients. He's worked with me personally on some things. And George actually attended a office hours we are hosting through Zoom. One of the things that's happened in this brave new world of coronavirus is it's made us rethink the way we work with our businesses, the way we work with our vendors, and the way we work with our customers. And in the 10 minutes or so I'm going to talk today, no matter what industry you're in, no matter what you do or how you make money, whatever you were doing a year ago, it's probably going to look a little bit different in the future. We're very fortunate that my firm, through the hard work of people like Lief and our other partners, we were probably more prepared for this brave new world than most businesses. We already were technologically advantaged in that we were 100% set up to work remotely at all times. We had contingencies in place for failure points in that remote environment. So I was a little bit ahead of the curve when it came to say, how can I help other people? Rather than spending my time as a managing partner figuring out how to do my business and how to manage my firm and to do the things that my clients need, it really, my call to action was a pivot to how can I serve others? How can our firm serve others? And so we started hosting office hours is what I'm calling them. The concept being, instead of going in and seeing your CPA or your financial advisor, come into our office hours, and instead of coming in and exposing somebody to risk or taking one yourself, let's just use this forum. I can share anything I'm looking at through this forum with you guys. I can look at what you're looking at on the screen. So the technology, we're very, very fortunate that we live in a world that the technology is already there. So the first thing I tell people is take a deep breath. Even though the way we do business is changing, we can do everything we need to do as business owners and managers and have much of the conveniences we used to depend on an office environment for. And we're really fortunate. Those of us who, subscribe to organized religion probably know churches have moved online.
That's great.
We communicate with our teams daily, sometimes multiple times daily online. As business owners and managers, the very first thing I'm going to ask you to think about is how are you in front of your people? How often are you in front of your people? Are your people heard? Are there real valid concerns and questions being addressed? How are they able to communicate with you? I think the first and most paramount thing of any business is good communication. So if every business out there could do one thing and facilitate a consistent, smooth flow of information, you probably will deal with 90% of the other problems that are going to come down the road. So communication. Obviously, the Zoom platform is probably exposing at least one or two people on this call to a new way of communicating. There are other tools out there. Microsoft has a product called Teams that you probably are on your computer if you're an Office 365 user that you didn't even know is there. Those of you that are strategic acquirers probably know Microsoft bought Skype for this magical technology, SkyPad. Now, Microsoft Teams is utilizing the Skype platform. I read data statistics published by Silicon Valley a week ago that said in 1 week's time, Microsoft had issued new free licenses of Microsoft Teams to non-Office 365 users than any total license count for Zoom, for Skype, and for Slack combined. Think about that. This brave new world is presenting opportunities to some businesses. Now, for the remainder of what I talk about, I'm going to talk about from the perspective of from three separate perspectives. From a company management and cash flow perspective, from a customer management and cash flow perspective, and from a vendor management and cash flow perspective. From a firm management and cash flow perspective, as a business owner, you probably need to be thinking about a few things that you probably put off, that frankly, the new Corona environment, the cheap oil environment, the low interest rate environment, this brave new world, you probably need to pull some things up on your to-do list that you've been putting off. When I was thinking about what investors and managers and owners need to think about, I struck some stuff off my checklist, if you will, for financial management. I'm not talking to CFOs on this call. I'm talking to investors, acquirers, sellers of businesses. So I was thinking about what would, if I own multiple businesses, what would be the first things I would do that I would define fruit to batten down the hatches for whatever comes with sub $20 a barrel oil. The first things I could think about were pretty obvious to me, and Lief is going to talk about a few of these things. But remember, if you paid income taxes in prior years on any of your businesses, that should be considered in the current year. Lief's going to hit on some of the specifics to carryback rules. Some things have changed. All I'm going to tell you is if you paid taxes related to a business, talk to your CPA. There's probably some opportunity out there in the CARES Act, or you may have an asset that you could utilize in this current environment. Second thing I'm going to tell you is all your fixed costs on your income statement. Everybody's telling you this, and I'm just going to reiterate the common sense tactic that you should be considering all those fixed costs for A, are they necessary? B, are they negotiable? When we talk about negotiable, you're talking about contracts. You need to consider, is the contract price negotiable? Is the contract term negotiable? When you look at the valuation of a business, both price and term of a contract can drive the value. So when you're looking at your businesses you own or any business you're looking to acquire, you'd want to ask yourself that question. If I'm an exploration and production company in oil and gas, can I get out of rent today, but use the end of the lease as leverage? What do I need to do to activate that leverage? You need to be prepared as business owners to be more willing to share financial data now than you probably were 4 months ago. Our firm personally uses a landlord called Metro National here in Houston. Metro National has put out a very sophisticated checklist that they're going to make every client who goes through an abatement or any kind of relief go through. Frankly, as a business owner, I'm going to tell you some of the questions they're asking are very logical and I think reasonable, given they're probably facing uncertain economic times. You need to work with your CPAs to make sure your monthly financials are in order. Lief's going to talk about this with the CARES Act specifically, but also when you're talking about renegotiating leases, don't be surprised if they ask for a balance sheet income statement on a monthly basis. Don't be surprised if you're asked to produce that. It may come. One of the things, I was working with one of my groups that owns a bunch of restaurants here in Houston. And one of the things they were asking me is, John, what do I do? And I said, well, my first advice to you would be take a picture of every food item you ever sold and put it on social media, because the companies that are able to low-level grassroots market for themselves via social media are able to stay above water. But the second thing I would do would be considering profitability by location. Do I need to have 14 stores open in Houston right now? Should I consider shrinking that to 3? Could I consolidate my operations into a few key strategic locations? Could I then go back to the landlords or the owners of those other locations and say, I've shuttered my operations. What can we do? Could I go to my vendors, say, I've shuttered my operations. What could I do? Second thing, and this is from a vendor perspective, I've been telling them is take advantage of any payment terms you can right now. Delay everything you can pay, but take advantage of any payment terms you can achieve. You might need that cash savings down the road. If you don't get a payment term, don't pay it if you can. If you can possibly not pay it, conserve cash. Cash is going to be king. Some of our businesses on this call are going to have access to operating lines of credit. We all know that capital markets are shrinking in a low interest environment. One of the things I would advise you, take serious consideration to drawing on your line of credit capacities. Who can recall what Ford did that kept them out of the GM mess? What did they do with their line of credit? Think about how that impacts your business. Because one of the things I'm wondering, I don't know, none of us have crystal balls. When interest is next to nothing, how willing are banks going to be to lend money? Secondly, what are banks going to do to reduce those exposures in the marketplace to capital markets? Well, if you have unused capacity in your commercial line of credit, consider that. My last piece of advice there is whatever you decide that's right for you or your business, be advised that this is general information. Whatever you do specifically targeted to your businesses, you need to talk to your financial advisor on that, your CPA, because what's right for one business that's a manufacturer may not be what's right to another business that's in some kind of asset-based lending environment. And whatever that collateral is may have just, maybe if your borrowing base is calculated on $40 a barrel, and now we're looking at oil sub 20, before you borrow on your line of credit, you may consider, do I have a technical default if I do? So before you draw, talk to your financial advisor, your CPA, because I would hate to get you in trouble with this general information. But if you do get to the end of that analysis and you draw on your line of credit or whatever commercial capacity you have, consider moving it to another financial institution. Most of these financial agreements have baked in rights of offset. What that means is there may be some ability of that bank to take back your credit and apply it and take back your credit borrowed from your operating account and move it back to your line of credit account. So if it makes sense to draw on your line of credit, consider moving to another bank or moving into treasuries or whatever you define as some low risk type investment. I looked at treasury yield curves just this morning, and I don't know what we define as a low risk investment right now, but just know that if you take the money out of your line and move it into your operating account, they may have the right to move it back even without your permission. Another thing I was thinking about on low hanging fruit, many of us have commercial fleets. Many of us have commercial equipment we use, whether it's construction businesses, if you're a hospital and you own MRI machines, if you're a restaurant company and you're leasing delivery vehicles to drive your sandwiches around right now. Have you audited your vehicles in your insurance policy? There's a whole plethora of opportunity in your insurance policies right now, and I'm not talking about business interruption insurance. Most of y'all probably don't qualify for a BI claim anyway. I'm not an insurance expert, but I can tell you it's going to be pretty difficult. But what I can tell you is you should consider two things. Number one, when you came up with your premium for your next operating year for whatever your business does, what projection did you provide to your underwriter for them to set that premium? What does your projection look like now? Could you consider sending new projections? What does that do to your premium? Second piece of that, back to the fleet question. If you had a fleet we have a client that has about 800 service vehicles driving around Houston right now. How many do they have driving around now? In their case, it's actually the opposite. With people working from home, unintended benefits of coronavirus. More people are fixing things in their house. Their demand has gone up because they're simply able to be there to allow their companies to be in the homes to do things. But if your fleet's not being used, how many vehicles are you insuring right now? How many excavators? How many dump trucks, loaders? Audit your fixed assets to your tax return, cross-reference it to your insurance policies. We should have the same assets on all the lists, even if they're fully depreciated. That's one of those things we often put off, but it's there. All right, so there's other stuff I could talk about on the vendor side, and if anybody has any specific questions on vendor management, feel free to send them in a question. I'm of the opinion that this is a more sophisticated office meeting, so I don't need to go through some of the lower level, more common sense pieces of advice. I'd rather get to Lief's conversation. So now I just want to go through the customer management side. You'd be shocked at how many businesses haven't talked to all their customers. You'd be amazed at how many owners I talk to that haven't called every one of their key customers, starting with their largest, working to their smallest, and asked how their businesses are doing. I'm not just talking about projecting future revenues. I'm not just talking about predicting future orders or cash flows. Are you going to get paid for what's out there today? Are you going to get paid for what projects you're working on now? Are you going to collect your AR? My advice to all of you is call every one of your customers, starting with your largest, getting to your smallest, and ensure you're going to collect. If you're an emergency room business, probably don't need to make those calls, because I don't think Blue Cross and Blue Shield is going to be default tomorrow. But if you're manufacturing oil tools right now for Halliburton, what comfort do you have you're going to get paid for the production you've run already? If you're a professional services business and you're about to incur 250, 300 grand of production for some project for one of your clients, what's the probability that you're going to collect on that? Do we need to go to a collateralized environment for services? Do we need to consider retainers like George and the lawyers on this call would do? You know, I have a consulting company I represent. They do HR consulting all around the world as a subservice to ADP. They're making ADP, for all the work they do for them, essentially guarantee all the work they do, or they're not going to do it. How do they know the credibility of the companies they're going into where they're supposed to pay for this, that they're going to get paid? So from a customer's perspective, my sole piece of advice is talk to every one of your key customers now. Moving over to some last little housekeeping items I would make for you. There's some best practices and tips out there for how you achieve some of these cost-saving ideas and cash flow strategies. The last thing I would leave you with, how many of y'all have empowered your businesses to figure it out for themselves? How many of you have empowered your teams to figure it out for themselves? I follow a lot of futurists and a lot of technologically minded people. And there's organizations out there who financially incentivize their own people to find unusual savings. I've found companies out there who are financially incentivizing somebody inside their business to collect AR now for services they haven't even performed. Have you considered empowering your own people to manage some of these things that you're probably concerned with? That's my call to action. Find a way to do it. And then use Zoom or Teams, whatever, to talk to them, see how they're doing. And do it often and do it now. And that's my advice to you guys. At this time, I'm going to turn it over to Lief Nixon. Lief is our tax director. Besides spending a lot of time reading 900 pages of the CARES Act, he's chasing his kids around. He's become a homeschool parent. He's managed the expectations of his working wife while working from home himself. And on top of all that, he is sharing in the rotation of all the partners of occasionally going to check our own mailbox at the office, because who knows what check's sitting in it. So Lief can speak from a perspective of a tax professional, but he's also speaking from the perspective of a father, a family man, and someone who's worried about paying the bills just like the rest of us. Lief?
Hey, Lief, 1 second. I want one question for Jon before you take over.
Sure.
First of all,
Yes, sir.
Jon, outstanding information. Appreciate you sharing that. A number of questions had come in prior to us getting on our meeting today, and this may be, I know you'll cover this in the Q&A, but maybe just one or two points you can share as to the impact on the M&A space as a result of what we've seen in the last 30, 45 days.
So, and thank you for reminding me of that. And if this is, I did receive a list from Bob, and Bob, thank you for sending it to me in advance because it helped. I will tell you, some of these questions are grade 8 questions, and I can't answer them. Some of them I think we can. So what I'm going to do is I'm going to whittle them down to the ones that I personally don't think I can really actually address at this time. One of the first questions hits on the nose of financial accounting. I'm an auditor by trade, although I haven't done a single audit thing in about 2 weeks. The question was, how should we account for disastrous Q1 and possibly Q2? Basically, long and short, we have known losses, known impairments to assets, known impairments to investments, and that's very much on the nose of what I do. And so there were 3 things I thought about when I thought about this question. Number one, if you have a known drop off of business that we think is long term, or as we use the phrase permanent in financial accounting, can we reasonably conclude that when you have coronavirus changing the way the economy works in the entire world, coupled with low oil and low interest rates, is it reasonable to assume there's probably some assets that could be written down at the end of 2019? Absolutely. Are there probably some assets that should be written down at the end of Q1 of 2020? I think that goes pretty much without saying, and your auditors and your financial accountants should be helping you with that piece. One of the things we're doing to help our small businesses that are our clients is we're helping them look at their assets, and we're helping them. I had a gentleman the other day called me and said, John, I know how to cut a piece of pipe to make it a coupling to bolt together 2 pieces of steel for drill pipe. I have no idea to tell you what the net asset value of my investment in this machine shop. And I said, well, fortunately, I can help you with that. So if you are in one of these businesses that you know are going to be severely, materially, long-term impacted by coronavirus, coupled with some of these other factors, you need to be talking to your CPA now about what that impairment looks like and what is the appropriate balance sheet date to record it, because there are special rules on when you record that impairment. I use the word impairment. Y'all use the word losses. Just consider it the same thing. Now, one of the things I would caution you, I'm more of an optimist. I tend to look at this as 4 separate problems. We have coronavirus. We have cheap oil. We have Russia and Saudi fighting it out, which is also part of cheap oil, but it's also different. And when I say cheap oil, I mean cheap oil, natural gas was here before Saudi and Russia started fighting it out. And then the last thing is we have low interest environment. So we have 4 separate things. And I would challenge you, when you're thinking about impairments or losses, to break them apart. While we can all get overwhelmed very quickly with compounding coronavirus on top of cheap oil, I, being the optimist, would tell you that whether we're out of this or back from it in 2 months, 6 months, or 11 months is to be determined. But at some point, we will be past coronavirus. At some point, the world will get back to normal. At some point, people will go to restaurants. I'm actually working with a restaurant group right now for an action plan. They're terrified for when we can go back to restaurants. They're terrified of what the demand's going to be in the short run when everybody can finally go eat where somebody else cleans up after them. They're terrified how many customers are going to piss off with the 2-hour wait. They're terrified about having to retrain their staff. So some of this stuff is temporary. I don't know how long the interest rate thing's going to last. If your business or your investment is adversely impacted, or your investment in a business is adversely impacted by low interest rates, that's probably a separate scope of impairment than the coronavirus itself. So think about how your business is impacted by each of these 4 things, and think about, in your best case crystal ball, Merlin the magician estimation of how long that's going to last. Think about those things. Call your CPA now. Let's talk about them. So,
hey, John, I'm gonna jump in here because this could be an all-day session. Yeah. So unbelievably great information. But I want to flip it to Lief. I want to give him to share all his learnings from reading thousands of pages over the last couple of days.
I appreciate that, Austin, and John. I appreciate the kind words. The one thing I think John left off my list is now I'm also apparently the resident IT expert, and I am not very good at it, but I got a couple kids at home, and everybody's doing this remote learning, and tools aren't working right, computers aren't working right. So I'm learning a whole new skill set in that regard as well. Now, and Austin made the comment, I hope I don't look as haggard as he suggested. Yes, I have been doing a lot of reading, and I've been up, but, I've also found this, time to be probably in my, all my years of experience in accounting, probably the most dynamic and yet frustrating experience at the same time. We've never had before, all the social media, the outflows of information available, coinciding with, the lack of ability to get adequate clarification from all the resident parties, from the U.S. Treasury, the IRS, or the various departments. When these legislation was signed, it was signed a week ago Friday. Basically, most of the departments have 30 days to issue their clarifications and how they're going to implement all these various items. So a lot of the discussion today is going to be focused on the law as we understand it and the limited clarifications we receive. Because earlier I said this was a frustrating time. The reason I said frustrating is some mornings I wake up and everything I spent the prior day reading and understanding, somebody's now issued a clarification which made it null and void or modified the advice we've been giving to our clients. So one thing, this is a broad overview. I encourage everyone, for your specific situation, get with your advisors, get with your CPAs, get with your bankers to see if they have the clarifications and talk about what it really means to your business and which pieces apply. John and I are happy to take any questions after this, after the meeting, or you can feel free to reach out to me and I'm happy to, give you my insights. But, for a lot of it, the specific answer is going to be dependent upon your facts and circumstances. Now, with that, I was going to just give everybody a broad overview of the legislation. I was going to spend a few minutes just on the individual pieces and then spend more time talking about business pieces, just so everyone's in there. And by no means is this an all-inclusive list. There are some sections where I have not, I'm not going to get into the very specific mechanics because it's a very small population that it applies to, or it's not an area that, we dabble in. For example, I'm not going to talk about United Airlines and the bailout for the airlines. Don't deal with the airlines a whole lot. I know it's in there, not going to be addressed here today. So with that, just kind of taking a step back to the stimulus package, it was, about $2.2 billion, and it was, doled out for a variety of aspects. Just kind of a brief summary. We had about $250 billion that was, funded to the unemployment insurance program. Another $300 billion that's going to go to direct payments to individuals. About $350 billion for small businesses, which I'm probably going to spend a little more time on talking some about specifics of the loans when we get there. There's been another $500 billion set aside for larger businesses and those that have been affected by the virus, the pandemic. 50 odd billion for the airline industry. Another 150 billion for the states for disaster recovery and efforts. 220 billion in various business tax benefits, reductions, NOLs. We'll talk about some of the specifics there. And then plus about another 300 billion to the hospitals and veterans organizations. Now, from an individual side, there are like 3 or 4 main key takeaways from the legislation. And I'm sure everybody's heard about all these, so I'm just going to go over them quickly. First, there's these checks that are going to come out. There's a lot of confusion as about to when or how the checks are coming out. As of this morning, I heard it's probably going to be a couple weeks. But really, the checks get back to, for all taxpayers, singles, individuals will get $1,200. Married taxpayers are going to get, $2,400. You get another $500 per kid for the first 3 kids. And of course, the government, as with all things, they put a cap on each of these, these rebate checks or credits that the checks are going to send out of $75,000 for individuals. The phase out starts at $75,000 for individuals, or $150,000 for married individuals. So basically, by the time if you're married, you get to $200,000 or more, you're not going to get a check, which is, I imagine, a large number of our clients and our customers that they're just not going to get anything. Unemployment. This is something everybody needs to be aware of for their business making decisions. First, with the act, they've actually extended unemployment from 26 weeks to 39 weeks. But for the first 4 months, they've now also given an additional $600 per week. So that basically comes out to Texas, you're going to get around almost $1,100 a week in unemployment insurance. Just as a side note, as John was talking about some of the technology. Just heard today the unemployment insurance agency here in Texas, and obviously I imagine most people saw the report today that, the 6 million plus people who filed, In Texas, there are definitely, I've heard plenty of stories of people have been trying to apply for days online. The system is overwhelmed. They're addressing as fast as they can, but your guess is as good as mine as how quickly they'll get it resolved. Another thing that they often do in disasters for individuals is they give people the ability to access their retirement account savings, their 401ks or RIAs without penalties. Doesn't mean without tax, but without penalties. So right now you can now take up to $100,000, loan against your 401k, or you can take a $100,000 distribution from your IRA, and you actually have the ability to repay that over 3 years to avoid the tax effect. But if you don't repay it, you're going to have to pay a third of the tax each year. Net operating losses, we'll spend a little more time on the business side, but for the individual side, they've changed the rules now to where the individuals, in 2018, they enacted some new legislation. We're saying carry forwards were only going, NOLs could only be carried forward due to the change in the rates. They now have issued guidance saying, hey, capital or NOLs incurred in 2018, 2019, or 2020 can be carried back 5 years. The IRS hasn't given guidance specifically on how that, how and when they're going to start accepting amended returns for these carrybacks. But we expect that guidance to come in the next, 30 days. And then, typically an amended return takes, 2 months to process. So anyone who's holding out for an amended returns, it's going to be, 3-4 months probably before you can see anything from those pieces. Individual side, they've also expanded the charitable contribution limits. They removed them from AGI. So if anyone's given away a lot of money to charities in the past and have been limited, they now can take all their charities. And then the last item to note for individual side is the housing. For anyone who's got a federally backed mortgage, they've basically, for the next 60 days, this bill prevented foreclosures for the next 60 odd days. And you can also request forbearance. Switching, to the business side, I've probably spent more time in the last, few days or week, or last week, with everybody who's got questions about, the small business loans. And, I've, spent an immense amount of time on it. And I know, a lot of this, my bankers, I feel for a lot of the bankers I work with, they've been, drinking from a fire hose as well, trying to figure out what they're going to have to do, how they're going to do it. And I'll get down to the specifics of the loan in a minute. But first, just a brief overview of the loans and some other business provisions. The business loans, they've basically set up for small businesses, those with 500 or fewer employees. They've set up 2 loan programs. In a broad overview, you got the payroll protection program. The attractive piece of that is it is forgivable. Then they also have the economic injury disaster loans, which the government has always had, but they've now set up, a refined program for, the coronavirus. These loans, are also available, and we'll talk a little bit more about those specific loans in a minute. For businesses, they've also they've set up NOLs. They've changed the NOL rules for businesses. Just like with individuals, you now can carry them back up to 5 years, and they've also waived the AMT requirement. So, people who were limited before, there's now going to be planning opportunities for your business to go in if you incurred an NOL in 18 or 19 to carry it back. The one thing that hasn't been provided in the guidance right now, and we're waiting to see, is, hey, for those who are a C corporation, your tax rate is now 21%. If you incurred an NOL in 2018 at 21%, you actually get to carry it back and get a 35% refund in prior years. I mean, our expectation is yes, but until the IRS issues guidance, if they're going to make you prorate or adjust that, we don't truly know. But we're expecting you're actually going to have a way to do some sort of rate arbitrage and get, more back than you would carrying it forward. In addition to the loans, the government has set up payroll tax deferral options and payroll tax credits. The one caveat I'm going to give with all these is, a lot of these programs cannot all be combined together. So if you want to go, get out a loan, if one of the loans above, it's probably going to prevent you from being able to either defer your payroll taxes or get the payroll tax credit. But, the payroll tax deferral that I'm referring to is for all employers, regardless of size, you can defer your payroll taxes for the remainder of the year, just the employer piece, until half is due in December of 2021 and the other half would be due in December of 2022. So basically you can defer your payroll taxes for up to basically 2 years. In addition to the payroll tax deferral, they've then put out a payroll tax credit program. They've put various tiers in this program. For large employers to qualify for the program, you essentially have to have had a material drop off in your business, 50% or more, or be substantially disrupted. And if you meet those qualifications, the credit basically you can get is up to $5,000 per employee that remains on your payroll and continue to pay. For employees between 100 and 500, same basic rules apply. They've made it a little less rigorous though. Now it's just you can actually take employees that were significantly affected. So if you have an employee who was affected and has to work from home, you can actually claim just that employee if the business itself didn't have substantial disruption. If you have less than 100 employees, it's all qualified wages. You can get the credit as long as you're not applying for one of the other programs above. Charitable contributions, the government, another way they've expanded, for people to have, I guess more money or create more losses, is now you don't have the same limitation on your charitable contributions in the past. Corporations were limited to 10%. They've now increased it to 25%. And then, then a couple other business items. I'm not going to spend a whole lot of time on it, but the CARES Act also authorized, 400 plus, almost 500 billion for the emergency lending to businesses. There are going to be, in particulars with this, if you're applying for these loans, the government, I think you've probably all heard about, there's going to be congressional oversight. There is going to be limitations on, executive compensation. There is going to be, the inability to, do stock buybacks. This was kind of one of the last items they hammered out that, was kind of holding up the legislation is, this loan program. They wanted a lot more responsibility because lessons learned, from, the 28 downturn. The Democrats pushed hard for this and got this additional oversight put in here. So if you're applying for those loans, just be prepared. There's going to be a lot of probably hoops to jump through that, historically weren't there in the past. Three last little items before I kind of talk about the business loans for small businesses. They've also expanded, in 18, they put a new limitation in on business deductibility of business interest. They limited it to the 30% of a modified number, which we're not going to get into. All you need to know is that ratio has gone from 30% to 50%. So in most cases, people should be able to claim, if they were limited before, we'll be able to claim more interest, if not all of their interest. And then this is just one pet peeve I had to bring up for everybody. When they passed the legislation, I don't know, a couple years ago, there was no clarification on qualified improvements, what the depreciable lives were. They actually went from 15 years to 39 years. We didn't think that was the government's intent. So 18, we still treated them as a 15-year property. The government finally issued clarification that, yes, they meant those to be a 15-year property. And the big reason that matters is anything that's under a 20-year life, right now you can take 100% depreciation on. So government did issue that clarification. And then, not that anyone hasn't heard this, the last, items, everybody's tax deadlines and payment deadlines are extended to July 31st. Most of the states have acquiesced and are following the federal. And, I think there might be one or two holdouts, but, as I knew, those weren't consequential. So now you have until, like I said, till July 15th to file all your tax returns and remit taxes without penalties or interest. You're not accumulating penalties and interest right now, so you can hold on to your money for that period. Now, with the business loans, this is where I've, and at the end, I'm hoping if there's some bankers on the line, they can provide some clarity that, we don't have out there, because, the small business loans right now, this is the hot button issue today, and it's really been, consuming a lot of time the last, week or so, is, when are they going to become available? What can I get? And it comes down to, like I said, there are two loans, and really the focus is on the payroll protection program. And just a real broad overview on the payroll protection program. The intent of it, is, the highlights of the program is this funding is really meant to help you retain workers, to maintain your payroll, to cover, and to help cover your rent, mortgage, and utilities for a 2-month period. There are no costs to apply, and the big piece of this is the loan can be forgiven, provided you meet the requirements of the loan program and can document you spent the expenses in an approved fashion, at the end of the 60 days. Who qualifies for these loans? It's, largely it's any small employer under 500 employees. They've actually put special qualifications in, though, for certain franchises and certain industries with more than 500 employees. So if you're in the hotel or food service industries, the 500 cap, may or probably won't apply to you, but I would tell you, talk to your particular advisor. Sole proprietorships qualify, independent contractors qualify, self-employed individuals qualify. So basically, excuse me, anyone under 500 employees, you can qualify for, the payroll protection program. A couple ways varies from the way SBA loans typically work. There are no there are no personal guarantees that are required. No business collateral is required. This is really just meant to be a payroll loan, and it's 100% funded and forgivable. Now, can you, when or how can you apply for the paycheck loan? This is where, what we're hearing and what we're seeing is, I guess a few days ago, the Treasury Department issued an application out there. They posted an application and sent it out to the banks. The banks have been, I guess on the other end of this fire hose, trying to figure out how they're going to get these applications up online and what their version of the application is going to be. Most of the banks are working to where you're going to be able to log in starting tomorrow and complete the application online. Now, what exactly the banks are going to require, that's the piece that, I don't have exact clarity on. I can tell you the pieces that, the government's going to mandate you have. You're going to have your payroll records available, your 940s, your 941s, W-2s, maybe even your payroll register. You're going to have that information ready and available to complete the application. Other things I would tell you may need, just so you're thinking about to have there, might need articles of incorporation or your partner bylaws. Probably going to want to have copies of your last couple of years' tax returns on hand just in case. Probably a couple last years of firm financials on hand or company financials just so you have them just in case. Just because it's really going to depend on what the banks ultimately end up asking for, which we've been getting a lot of mixed signals of what some banks are asking and others aren't asking for. What can so once you go out and you have that information, you'll be able to apply for the loan. The loan that you can apply for this payroll protection program is going to be 2.5 times your average monthly payroll. And your average monthly payroll for most employers is going to be for your 2019 calendar year. Basically, take your 2019 payroll, and you're then going to have to go through the exercise of, now I know my total payroll is, and then you're going to have to back out from your payroll expense, your comp expense, the amount of compensation paid to anybody in excess of $100,000. So there's a $100,000 limit per employee, and then on top of that, you then can add in your benefits cost and your retirement plan cost. And when you get that adjusted total, that's basically gives your annual total, divide by 12, multiply that by 2.5, so you get your monthly payroll cost, that your maximum loan amount. Your maximum loan amount is going to be the lesser of your 2.5 times your average monthly payroll, or $10 million, which in most cases I imagine is going to be the 2.5 times. Now again, and the last item on this one is, that's the maximum loan amount. The forgiveness of the loan. The loan will be forgiven after the loan is funded. You have 60 days. That 60-day window, you have to keep track of your payroll expenses, your rent, your utilities, and interest paid on any long-term obligations, including your mortgages. Those expenses, if those use up all of your loan, the loan will be forgiven. If you do not use up all the loan will not be forgiven. And there's also another clarification that no more than 25% of your loan can be used for the non-payroll items, which are the rent, utilities, mortgage interest, or other long-term interest. And then also the other way they're going to affect your forgiveness is if you have 50 employees when you apply for the application and you reduce headcount, they're going to reduce the amount of forgiveness on your loan based upon your headcount. Or if you go the route of, hey, I'm going to reduce overall payroll costs, and I'm going to give everybody more than a 25% cost in their payroll, you're also going to be subject to other further reductions in the amount that can be forgiven. So when you go through these applications, the first piece is to understand what is your maximum loan, and then the other piece is going to be keeping track of your records and your information to document that what can be forgiven at the end of your 60-day period.
Hey, Lief, let me jump in here.
Yep.
Unbelievably useful information. And like John's material, this is probably going to go on for another day or so. But what did want to take about 10 minutes or so and open it up for questions. I know that Kyle, if you take yourself off mute, I know you had a couple of questions that have come through the chat room that we'd like to pose to our distinguished guests.
Yeah, since Lief has already talked, I do have one question for John, but since Lief's already talking, and on the payroll protection, what about 1099 contract employees?
1099 contract employees, you cannot include them in your payroll, but 1099 contract employees who have their own 1099 can file for a payroll protection loan themselves, up to $100,000 if they can support it. Essentially, they'll have to dig up their 1099 miscellaneous from prior year and file it. But the employer, you're paying a 1099 employee, you cannot include them as part of your payroll costs.
One more. In a firm that operates on minimum payroll but is carrying heavy expenses for rent and other expenses, can they get the payroll forgiven from the payroll protection, but also get an extended loan to cover additional costs?
Yeah.
Over and above the 2.5 months of payroll?
That I would tell, that's what really kind of the intent of the economic injury disaster loan is, which is, the traditional SBA loan through emergency. I would tell you look into that program. It's because that really, the one thing you can apply for both programs. The caveat with both programs though is you cannot use the funds from an EIDL loan for your payroll or for similar expenses that the payroll protection program is. If you use those funds, if you use both loans for the same purposes, you're going to run into problems. So that's why they have the other loan available for people who aren't necessarily payroll intensive. You can now use the EIDL.
Okay. And this question is for Jon. Back to your point about calling all your vendors, getting out in front of it. Some people have heard that they're afraid that if they call their vendors, give out all that information, that they'll be taken advantage of, and maybe better to wait to hear from them. Do you have any thoughts on that?
They're saying their vendors are saying that they are taking advantage of the vendors?
Yeah, if I call a vendor, or if I call the customer / vendor will take advantage, better to wait from him or her to come to me.
Okay. That gets into a psychological, understanding the counterparty thing. So I would tell you, my advice would be use judgment. If you know your customers and you have a relationship, you probably know which ones you want to call. And well, first of all, on the customer side, I think you need to call your customers regardless. You need to understand how they're doing, how their businesses are doing, irrespective of this. Secondarily, you need to identify based on what they're telling you, whether or not you think they're a collectability risk. One of the things we're doing internally is for our business clients is we're running a list of known risks and suspected risks. And there's a difference there, right? A known risk is if you have a hotel chain and they have 40,000 employees on furlough right now, they're a risk, right? But if you have, say, a chain of veterinarian clinics, that might be a risk, might not, depending on how well they manage their cash flows, that's on the possibilities list. I would tell you, anybody that's a known risk, you need to understand your expectation of realization before you do anything for them. Bottom line, you don't want to do services or manufacture something, or you don't want to go build up a building for an owner that's not going to be able to pay you 6 months from now. So it's going to be a case-by-case business. That's the customer side. Now on the vendor side, I think it really goes to your own business and your projection of cash flow and to determine how serious your need to negotiate with vendors is. But I would also, I would tell you that your vendors get it. They're probably going to be more willing to renegotiate all contracts now than they've ever been. So I would encourage you to take that into consideration as you go down the vendor list.
Yeah, we got Brian here. He gave some additional advice. Call to say hi first, see how they're doing, then you can talk current and future business situation. That seems like a good this as well. So those are the only questions I have in the chat that I see. So unless Austin has.
Yeah, Jon, did you want to go back to the list of questions we sent over prior to the meeting? Maybe you probably have time for about one question. Maybe you could one or two maybe, and read the question and respond. If you'd be so kind.
Yeah, so there's a real easy one. Will accounting differ for buyers and sellers in the current environment based on who's taking out debt to facilitate the purchase of a business? The answer should probably be no. There would always be what's called outside basis versus inside basis. And to say it this way, inside basis would be the acquiree. Outside basis would be the acquirer's interest in that business. But there's certain technical parts of accounting whereby inside basis from a financial statement perspective would be adjusted to match outside basis. So without knowing the exact circumstances of that question, I would tell you the answer is maybe. But generally speaking, with the Corona environment, with low oil, low interest, we're probably looking at that. And access to capital markets right now would be a consideration in the value of that investment, right? If you can't finance it, whatever you think the street value of that investment is, it's not what the street value is. So it needs to be considered. Someone asked a question about how do you consider different industries in light of coronavirus and oil. I think I touched on that when I said you need to look at each business and ask the owner, how are they impacted? What can we do to help? I literally had a new client call 2 days ago. We talked for 2 hours. We didn't talk once about the services my firm can provide. I just helped this person who owns a construction company figure out how they're going to navigate this this payroll protection program, because they have a lot of employees all over the state of Texas. And the business owner was like, I know how to build buildings. I have no idea how to deal with this stuff. So in those conversations, when you're talking with customers, even prospective clients, find out what, how can you help? Again, I told you my tone since this has happened is not what can I do to earn money? It's how can I serve? How can we help? And the first step in that is understanding your clients. And I appreciate that value add in the chat.
Yep.
There's questions about projections in here. I don't want to get into the questions about how you would interpret projections based on this environment, both positive and negative, because those would be too granular to each individual business.
Mike, you have the floor.
Thank you, Austin. Can you give me the last slide?
Sure can.
Because it fits with what Jon just said. Thanks everybody for joining today. Jon, Lief, that was excellent. I've gotten comments on the chat. Everybody is appreciating it. One thing that struck me, and I think you touched on it right there at the end, Jon, that there are things that overlap here, and things that are more opportunities in the CARE Act that are more effective or efficient for different types of situations. It emphasizes to me that an owner, somebody who's involved in a transaction, they need to, I'll say, lean on their advisors. That's why you need trusted advisors right now, whether it's your accountant, your attorney, your coach, whoever they might be. This is a time to lean on those folks to see how best you navigate the situation. What are the opportunities? This loan versus that loan, payroll protection, and so on and so forth. So emphasize that. What else? We're looking forward to having. Jon, you started off with people, your people. Kudos for that. That is most critical. We're working to organize a discussion in roughly 10 days or so that will focus on supporting the people through this. That's kind of our next topic. We've got a number of topics we want to work through, including the different loans. So that's to come. Want to thank again Austin for navigating, for taking the con. I want to thank Kyle immensely for helping us put this together there at Creative Heights. Jack Chang and Ray Fernandez on the board, along with Bob. And lastly, but not leastly, I want to thank George Kariski. I've known George, I don't know, it's probably been 10 or 12 years. Any of you who know George, he signs off in most meetings as saying if he can be of service, he's a resource call, he's a servant leader, and he's shown that in basically being the, I'll call him the inspiration to get everybody from the M&A Forum leadership to say, hey, what can we do and how can we make a difference for people? And here we are today with excellent resources in Jon and Lief. I thank you, everybody, for taking the time today. I know it's strangely busy with kids and everything else going on. I guess point to what Schweitzer said and what Jon said at the outset about service. This is a time to look for ways to serve. I guess we'll adjourn. I think lunch is probably going to be served in your personal kitchen. Remember that your mom isn't around, so you got to clean up your own dishes, and you'll have to go until the restaurant's open. Thanks, everybody. Thank you, Austin.
Thank you, everybody, and appreciate our guests for joining us. It's a fabulous session today.
That was excellent.
In touch. And the recording will be available, so you'll get instructions on how to receive the recording for those interested. Everybody have a great day. Thank you so much.